Hey folks, welcome to Pro Trader Strategies. My name is Eric Wilkinson and this is Spotting the Trade. Before you go, make sure you hit that subscribe button, and right next to it there's a little bell that'll indicate when I come on unannounced so that you guys can participate in these videos. So make sure that that little bell next to the subscribe button is lit up there, and smash that like button for me. It helps out a lot, feeds those bots and shares that information with somebody else that looks like you for that bot. Anyway, the other thing I want to talk about today, this afternoon, I'm going to be interviewing Steve Primo. We're going to be talking about trading and all kinds of other things wherever the wind blows us. You guys drive that content. So for that purpose and this purpose, comment over there on the side. Drive this conversation going forward. All right. So I want to talk about a couple of things. I did scramble all week trying to get to you folks and have an opportunity to share with you guys some of the information, some of the things that I was out doing this week. And one of it was, oh, here's what I want. Sorry, give me a second. That's not what I want. There we go. They've changed the layout here a little bit, folks, so you're going to have to bear with me for a moment. There we go. I want to allow that. All right, so I want to show the charts here. Something we talked about earlier on this week. A lot of these numbers are coming and rolling forward. Last week, I was struggling. I was out at different sites trying to use a hotspot to show you guys some of the stuff that's going on here around Arizona. It's one of the more popular states for folks to be moving to. We have the largest growth in the United States right now, and I wanted to go in and around some different areas and show you some aspects of that. I'm going to try and do that here heading into the new year, get a little bit more out in the real world and show you guys some things with boots on the ground. All right. So if you like that, smash that like button for me or comment over the side. If you guys want me to go visit some things, there's some really cool stuff here. As a matter of fact, we have one of the largest chip makers building a complex here in Arizona, and it is massive. It's pretty cool. All right. So I'm going to show you a couple of those things going forward. We're going to be doing some road trips, if you will. All right, so crude oil making a little bit of bounce after we saw that big drawdown last week. So seeing some of those pressures, well, why is it falling off if we saw a massive drawdown? That should tell us that there's a lot of demand out there for it. Well, what we're seeing is China slowing down. And folks are getting really worried about China slowing down. Why? Because that should show that there is a global slowdown ahead of this. Remember, I talk about Purchasing Managers Index and how that's the most important data point we get the entire year. Well, why? Because things like China, when they see growth slowing, they're going to pull back. I don't think that's the case right now, though, folks. What I think is happening right now is China is actually slowing on purpose. Why are they slowing on purpose? It's not to drive demand or anything else like that. What I think, there are twofold going on here. The major aspect is the Olympics are around the corner, and the fact that they have such horrible pollution in China, they're going to try and make that look aesthetically pleasing to the public during the Olympics. So I think that they're going to cut back on this. And why is it so polluted in and around China? Because they drive their energy through the combustion of coal, folks, and it is dirty coal as well. So they're trying to pull back on some of that. Some of the other aspects are, I bet they are kind of in the camp that I am. Right now, we're seeing real tight supplies. But once those supplies get offloaded, you think about them trying to ship that all over here to the United States by Christmas. A lot of that stuff isn't going to be offloaded by Christmas. What happens afterwards? Well, we see demand really dry up after Christmas. We're going to see all of this product come in after Christmas. We're going to see demand dry up after Christmas. That is going to put a hurt on a lot of folks. We could see prices really start to come off a little bit. Now, that's not the transitory inflation that we're talking about normally, that should be more of the transitory inflation we're talking about. But what isn't going to be a transitory in the meantime is those wage inflations that's going to be here to stay, because you can't pull back on inflation that way with the wages unless there's a catastrophic event in the United States that causes labor to really have the what do they call it, the apron strings cut. Anyway, We've got crude oil making a move here to the upside, as I think that folks are really starting to say, hey, this demand thing really is in China a product of the Olympics. I think that there is demand. I think the economy is starting to move here. We're seeing the bonds come off here a little bit, touching the 50-day simple moving average. That did not act as much of a support. Why? Probably because we've got this point of control just slightly below it. So that 160 handle in the bonds is going to be a psychological level that the markets are going to battle back and forth from. We've seen interest rates come off a little bit. Why? Because of that whole global slowing thing. I don't think that that's really the case that we're seeing here. I think we're seeing the economy actually fire up here. But bonds are coming off. Keep in mind that when bonds come off, that means interest rates are incrementally rising there. They are inversely related, folks. You know, you see me talk about the teeter-totter a lot. When they go up and down, if the product here price goes down, then interest rates here are going up. So those are the levers and pulleys we see in the markets. Gold coming off, but again, we're sitting there right around that 1800 area I've been talking so much about. Folks, I was gone for a week trying to get these shots with this hot spot, not working out. I am not Jane Wells. I can't go out onto a site with a crew necessarily and get these shots all the time. I thought I was going to be the Jane Wells of Pro Trader Strategies, but that hasn't worked out yet. We're going to figure that whole thing out. Bitcoin making a move to the upside. You know, it's been sitting there right at the point of control. I talked about it. I think we could see it easily ping back and forth between these 2 points of control. I would say risk is to the upside, despite that there's been a lot of headwinds for cryptocurrency. I think that Ether is still the one that's probably going to be the best upside. Yeah, we can talk about Bitcoin moving up $10,000 in a day, but what I think that Ether is going to slowly start catching up with Bitcoin going forward. All right, not necessarily bypassing it, but catching up with it for sure. VIX is coming off, as we saw the markets across the board trying to make some moves here today. So VIX coming off with that bullish move. Now, Dow Jones made a nice move late in the day to finish about half back, a nice claw back there. I think that there is going to see strength going forward in the Dow Jones because we haven't seen those market moves in the Dow Jones recently. The Nasdaq's been really the one that's been the one that has been moving higher incrementally faster than everything else. Now, we did have Micron Technologies come out with earnings today, very bullish. It caused the entire tech sector, if you will, from NVIDIA and anybody else who is involved in making computers, started making a move to the upside. That gave strength to the Nasdaq, which has been showing more weakness across the board. And I've warned you folks about that since it had the big run, if we started seeing these consolidations, we could see folks getting out of technology and into some of these more blue chip stocks that haven't had that kind of run that we saw last year or this past year. But now seeing a bit of a correction happening here with the Nasdaq. Now, I talked about this whole neckline here. We had a building out a shoulder. Now it came and touched on this trend channel here, which made me think that the shoulder, this far shoulder, was starting to break down a little bit, and we weren't going to necessarily see that whole. Sorry, I've got the old Head and Shoulders up there. Sorry, guys. But anyway, you could still see those Head and Shoulders coming through today as well. Let's see if I got my pen there. So yeah, our head, shoulder, the head coming down to this neckline here. This is the neckline, and building out another shoulder. Now, when we bounced off of this trend channel here, I was thinking that we were breaking that shoulder, but no, we are continuing to the downside here. So risk to the downside in NASDAQ to come down and touch this little line here. So yes, we are getting a bounce across the board in the markets. Now, short term, thinking short term, heading into the year, there's going to be some folks trying to make their portfolios, some big money, make their portfolio look good. So we can see heading into the end of the year, some pushes in these markets for folks that want to make, they call it painting the tape. And that is when they're starting to buy it up, try and get these prices a little bit higher, or at least making their portfolio look better towards the end of the year. I've even seen it where a person marked a position millions of dollars against them heading into the end of the year. Yes, millions of dollars against them. He basically sold it out. He was long the position, sold the market down. There wasn't a whole lot of paper in there, and he got his settlement at a really low level. That cost him to lose millions of dollars. Why is that significant? Think about heading into the new year. He didn't make that money. It was a paper print that made it show a loss basically from the 31st into the 2nd or the 3rd when we open up again. And then the position reset to the proper pricing. All right. So made that money back up in the next year. Well, I can guarantee you folks that these guys that are big money movers are doing the exact same thing in their portfolios as that gentleman I spoke of. And I saw it happen, did as well. It doesn't hurt if it's only a day or two, right? All right, E-mini S&P is making a bit of a push here to the upside. Again, we will see this 50-day simple moving average act as resistance as it would act as support on a pullback here. Now, markets made those nice moves to the upside. Yeah, we're probably fading. This whole China slowdown thing is probably more of a public show of how clean they are, really, when in fact, because we can't normally videotape around there, it isn't so clean. But anyway, I think we'll probably see some consolidation here, but for the most part, not a big sell-off here heading into the end of the year, but we could see some sector rotations and things like that. Like I said, we saw some Micron making the moves to the upside on positive earnings here. We can see the volatility getting crushed, making a pop to the upside. That's dragging up NVIDIA as well. Now, remember, I have on the ratio call spread in here where we're basically for every one call we buy, we're selling 2 to finance that call that we buy. So the idea is that we own this spread for free. Anything above basically 370 is where I start seeing losses happen because of the way that we build this strategy out. So please go to protraderstrategies.com. I go into all the details of this strategy, but the beauty in it is that I had on a long 310 to the 340 1x2 basically, which is the ratio call spread, which is bullish, created a credit for that, a nice little credit. My break even, like I said, is well above the high there that we are seeing. So a lot of move to the upside. I thought we would test those highs. Not really happening, but the beauty of building out this strategy is if I'm directionally wrong, I still get to make money. So with that said, this market has moved against me on this 1x2 call spread, the 310, 340 call spread, 1x2, selling two 340s there. That credit is basically looking pretty good right now. Now, I'm going to hold on to it and make these moves higher, but this trade working out quite nicely so far there. That's what I want to talk about with that tech sector. Yeah, I said tech sector probably see a little bit of weakness, but I think that's what we're seeing here today is we saw good earnings from Micron. Yeah, we got that initial pop to the upside, but then folks are starting to think, well, hey, that was kind of expected, and we've already priced that in a bit. It's probably some opportunities out there in some of these other names that haven't had the limelight like we've seen in things like NVIDIA. And folks, that's all I got for you. But before you go, please make sure you guys smash that like button for me. Subscribe, hit the little bell, because unannounced, I'll come in here every once in a while and talk about the markets. Make sure you check out us this afternoon with Steve Primo. That should be really a good and fun interview. All right, so that's all I got. Other than one last thing, if you can't take that, take it easy.